What's up, everybody? Welcome to Own the Chaos. Oh, man. First time I messed that up. I feel like it's the first time I messed it up. Welcome to the Power Zone. Hopefully, nobody caught that. It's like, I know you guys did, but hey, welcome. What's up? Hope you guys had a great long weekend. It is going to be another jam-packed week full of earnings. And listen, another more heavy hitters this afternoon. We got Palo Alto, TDOC, Caesars, Diamondback Energy, Toll Brothers, Medifast, a bunch of other ones that are also reporting this afternoon. If you guys are curious about them, make sure you're putting them in the chat. But look, this week is also just jam-packed, as I mentioned before. Tomorrow's a big day. NVIDIA, Rivian, Etsy, Synopsys Lucid, Dutch Bros, my personal favorite, kind of like dark horses, Dutch Bros. I think that you're just going to do well if you're patient enough with them. Marathon Oil also. And then Thursday, we have Block, aka Square, Carvana, Mercado Libre, Booking, Intuit, Live Nation also going to be reporting Thursday afternoon. So you're going to want to make sure that you're tuning in the afternoon at 3:45 p.m. Eastern time. Hit that subscribe button, hit that notification bell. And yeah, listen, it's going to be a great week. So just looking at the overall market, it's been kind of all over the place, but kind of starting to see that move down that we were, I don't want to say hoping for, but expecting. And I wanted to start off with what we're seeing here with the S&P 500. So let's take a look at that real quick. Here's your chart, charted out by none other than Don from the Don Franz Show. You can kind of see we're starting to potentially break down on this upward trend. This is going to be a pivotal moment, I think, for the S&P 500 as far as the chart's concerned. This is your daily chart on the S&P. You can kind of see that we're a little bit kind of in like I said, that pivotal moment. We're either going to break down below this trend and continue to come down to that 49 area. And as I'd mentioned, it wouldn't surprise me to see this come down to that 4,800 mark down here. I think that there's certainly a possibility for that to happen between now and, let's just say, June. I think that we could potentially see some correcting, some pullback, but nothing that should alarm anybody. As I'd mentioned before, virtually since the beginning of the year, this can't continue. This can't continue to just go straight up on nothing. And it's kind of what it feels like is happening here. And so I think that we'll see a little bit of a correction, something that's nice and healthy. I don't want to say that the sky's falling or anything like that, but then the second half of the year, we should see a nice little move up. Keep an eye on this. I think this could be potentially what we've kind of been talking about all year really so far. Would love to get your guys' thoughts on that. Karem says, let's hit all the likes. Yeah, would appreciate that. NVIDIA earnings tomorrow. Yeah, like I said, huge week, huge day tomorrow. I expect that there's going to be a lot of folks tuning in tomorrow for NVIDIA earnings. So it's going to be fun to watch, nevertheless. Let's take a look at Palo Alto. So cybersecurity has just been on an absolute tear. And if we come in and zoom out a little bit on Palo Alto, you can see that it's just been a monster. Over the last 52 weeks, it's gone up 120%. And just this year, we're 7 weeks, almost 7 weeks. Yeah, we are 7 weeks into the year. It's up 24.5%. Let's just call it 25%. So pretty crazy. Palo Alto is trading at 66 times next year's earnings, and actually more than that. The growth here, though, is still fantastic. It's growing at 24% year over year. Revenue growth forward is expected at 21%. So gotta love all that. Not only that, but the profitability here is also incredible. Gross profit margins at 73.5. EBITDA is sitting at 11. So they are just continuing to rake in the cash and continuing to grow. Why? Well, cybersecurity is still a thing, shockingly enough. And I would imagine that the more that we see from the AI craze, the more that cybersecurity is going to be in demand. I mean, we've seen, and we'll hear from NVIDIA tomorrow about demand on AI and how NVIDIA is just struggling to keep up with that demand because it's developing so fast. And because of that, it opens you up to risk. It opens you up to be vulnerable if you're in the AI space, or if you're a company that relies on technology. I'm not quite sure if there is one that doesn't at this point. But Palo Alto is going to continue to be one of those stocks that should do well. Now, can we see a pullback here? I would imagine. I mean, it bounced off of this zone down here at around 282 and has not looked back. You can see kind of from about, I don't know, the end of January to, we'll say January 22nd to February 6th, it moved a little sideways and then had another move up, and has been just chilling up here in the clouds for a while. Today's earnings could reflect more of that movement to the upside. I think that there's certainly potential for that to happen. Expected earnings today are looking to come in at $1.30, $1.97 billion in revenue, 6 upward revisions to 3 down from the street. I think that there's a lot of optimism. I think it's certainly important to make sure that you're not getting swept away by the hype. I'm keeping a watchful eye on Palo Alto shares and advising caution until we see how the market responds to these earnings. I'm looking for support level at around, that 300 mark, which is about right here. Keep an eye on that. I think also that 279, 280 mark could be a spot to keep an eye on as well. I think it would be a short-term pullback, if anything, if there's a negative reaction to these earnings. So just keep an eye on that. But yeah, I mean, I think that there's a lot to like here, and demand doesn't seem to be slowing down anytime soon. So I'm super pumped for that. I think that there's a lot to like here, and on Palo Alto, but I would be cautious if you're looking to try to make a trade specifically to the long side here before earnings take place. Obviously, as we all know, trading on earnings is always super risky, but if you just feel like you're feeling lucky, this would probably be one that I would caution against in at any rate. So that's your Palo Alto expectations. We do have other ones that are going to be reporting. Remember TeleDoc? People still trading TeleDoc? Let's go out to the daily chart on this one. Oh, that's your 8 hour. Let's go on the daily chart on TeleDoc. It has been a roller coaster ride. And actually, I want to take a look at the weekly, because all it's done is just gone down, 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 down. And it really hasn't found a bottom yet. Oh my God. I can't even. Here we go. Let's look at this. It was up as high as, this is one of those stocks that just went bananas, as high as 308, sitting at $20. It was at $308.69 was its all-time high, and it's now sitting at $20.45. TeleDoc is a great company. The product's great. If you ask anybody who uses TeleDoc, they love it. The problem is that they can't make money yet, and that's the real issue. Growth isn't a problem either. They're growing at 11% year over year. They've been around a long time. Earnings are expected to come in at a loss of 24 cents, $671.09 million in revenue, 2 upper revisions to 3 down. So the street's kind of split on this. Here's what I'll say about TeleDoc. They need to talk about profitability, a path to profitability. Gross profit margins are at 70%, and they still can't turn a profit on the net side. So net income margins, a loss of 155%. So I just hesitate to be super bullish on this. $3.48 billion is the market cap. They're and as I'd mentioned, earnings, they're expected to bring in $671 million. So they're bringing in around 2.8 billion. So it's cheap, but there's a reason why it's cheap. And so I think that we're going to have to hear something great from them in order for the stock to move up. Is there low risk, high reward? Yeah, I think so. I think there's definitely that, especially because TeleDoc has been one of those stocks that was so sensitive to interest rate hikes, and it seems as if we're at the very least getting a pause. If we start hearing about interest rate cuts, then I think that TeleDoc could actually do really well. And honestly, that's one of the big reasons why TeleDoc did so well back here, was because, this moved on interest rate cuts. And when interest rates were at 0, that's why we saw this crazy move out of TeleDoc all the way back here. This is one of those stocks that doesn't make money. They're operating at a loss. They're still operating at a loss. And so then when interest rates went up, this is one of those stocks that just got crushed. And I think it's going to continue to do that if we don't see some sort of signs of profitability. And that's what we're going to hear. That's what we have to hear from TDOC today. So they have earnings again, as I'd mentioned, after hours too. And then we also got Caesars. Now we've heard uh, from quite a few other gaming/gambling stocks. This is what it's doing today. It's down around 1.85%. We come back out to the weekly chart again. On this one, we kind of see the overall performance of Caesars, and it's kind of indicative of what we've seen from some of the other players out there. Excuse me, I just had like a ridiculous power sneeze. I think it shook the whole house. But anyways, um, Caesars, the big impact here from Caesars has been Macau. You can see that though that Caesars has found a pretty decent bottom at around 41, 42. I think probably like 41, $42 a share. And so if we start to see good numbers from Caesars from Macau, then I think that we could start to see some positive movement. That's what we're going to have to hear from them on their earnings today. This stock is trading at 11 times next year's earnings, nice and cheap. The growth year is also relatively decent considering the sector that's in. They're growing at around 9% year over year. Estimated earnings per share of 5 cents, $2.86 billion. No upper revisions from the street, which is another reason why I'm kind of like, maybe I would probably consider going long on this, depending on what these earnings show up. I think, we did see some early Super Bowl data that suggests some record-setting numbers for sports books. I think that Caesars obviously is going to benefit from that. We've seen Caesars, MGM bets. DraftKings also had a weird earnings, but I don't think we heard much as far as the Super Bowl, and that's probably why that was negatively impacted. So I think that there's a lot to like here with Caesars. One of the better gambling stocks that I think is worth owning. So, excuse me. So I think that this is going to be a fun one to watch as well as we await those earnings. I just wanted to check in with you guys. So we got about 2.5 minutes before the close. About 35 of you guys watch. Is 35? Is that right? No, it's 41. There we go. 41 of you guys watching. Again, we're going to be reacting to Caesars, Palo Alto, TDOC earnings. Palo Alto obviously being the big one. So a bit of a light day, which I'm fine with considering tomorrow is going to be bananas. Absolutely bananas. Because it's not just NVIDIA. Again, tomorrow's NVIDIA, Rivian, Etsy, Lucid, Dutch Bros, Marathon Oil also reporting tomorrow. So it's going to be a crazy afternoon tomorrow, to say the least. With that being said, guys, just wanted to check in with some of you guys. What's up, housekeeping? Why is Microsoft bleeding so much in the last week? I think it's just natural correction. We can take a look at that real quick as we're waiting on earnings. Microsoft, it's fine. I think it's just moving with everything else. I don't think there's anything really to worry about. One of the big reasons, I just think this is more or less of a correction. Come down here to the bottom of the expected move at around 394 and watch this act like a completely different stock. So nothing to worry about with Microsoft, in my opinion. I think it's just fine. I don't think there's anything to be nervous or scared about. If this continues to correct along with the rest of the market, it could break down below that expected move and watch it come down to maybe around 380. Wouldn't surprise me to see it come down and revisit those levels. But yeah, either way, it's the best stock to own in the entire stock market, and that's above Apple. I mean, it's probably 1A to 1B. Microsoft and Apple. You could own both of them, and you'll be just fine. So I don't think there's much to worry about there with Microsoft. What's up, Fernando Pereira, Kevin Hawthorne? Good to see you, my man. Savvy Money Show, always coming through and asking people to hit that like and subscribe button. Appreciate you, brother. Yeah, if you're just tuning in, make sure you hit that like button to get this pushed out a little bit further. I certainly would appreciate it. But if you could also hit that subscribe button and you're enjoying this stream and you want to see more reactions to other stocks during their earnings, make sure you're hitting that notification bell as well. I go live at 3:45 p.m. Eastern time. That's 15 minutes before the market closes, and we get to react to some earnings and have some fun with it. Snookeroo, what's going on? Good to see you. What's up, Presto? Good to see you. Long time no see for sure. I've been back now on a consistent basis for about a month or so. Try to get back in the swing of things. Try to get back in the trading, and we're building a lot of things here. If you guys haven't been around for a while, if you're just coming back, just like Presto is, we're building something new here. So Don, I see Don from the Don Fromm Show is also a part of this. We're trying to merge channels, so he's bringing his audience over here as well. This is the chart that you see in front of you has been charted out by Don. The way that he uses his zones is absolutely incredible. So you're gonna want to stick around because we got a lot to go. We got a lot to do, a lot to build here. So let's go ahead and check out Palo Alto, see if there's any movement on that. Bring it out to the 5-minute chart here. There we go. So here's your 5-minute. I just want to bring it out so we can see some real-time action on that whenever those earnings do come out. And let's split it up here. So we'll keep Palo Alto on the right-hand side of your screen, and then we'll pull up, let's pull up TDOC for now on the right side of your screen. So Palo Alto is on the left, TDOC's on the right. Both have their 5-minute charts up here. And we'll continue to watch. So Palo Alto looks like it's actually moving here now. It's up around 2%. All right, let's see what those earnings are. Bear with me as I get this pulled up, but the stock is moving here. Looking like it's indicating those earnings are out. Don't see anything just yet. It's super early. Let's see here. Soon as they come out, I'll be happy to share those with you. But right now, Palo Alto is up around 2%. Looked like that there was some volume coming in there. Melanie Hutchinson says TDOC is junk. Yeah, we already addressed that. But they have earnings today, so we're covering them no matter what. What's up, Eldon Rudy? Michael Hanna says, I think TDOC will be a winner today. Hopefully for your sake it is if you're invested in it. NVIDIA's earnings are tomorrow, Cobra Quotes. They'll be tomorrow at after hours. So make sure you're coming back tomorrow to react to those as well. Look, this is what I kind of talked about too, Michael. I said, it's not great, it's not good, but if they come in with some decent earnings, maybe start to talk about profitability somewhere. It could move. It could be a good short-term trade, but they just can't figure out how to be profitable here whatsoever. So Kathy Woods in TDOC. I don't know if she's still in TDOC or not. I don't know if ARK Invest still has it. I would imagine they would. But not entirely sure off the top of my head what she's in, what she's not in. Let's see here. Still waiting on those numbers from Palo Alto, even though it looked as if there's some movement on that. Guys, I apologize if I sound a little weird. I got some allergies going on. My nose is running, coughing a little bit. So apologize if I sound a little under the weather. I'm not really under the weather, just some good old allergies. Palo Alto still just chilling here. TDOC's up a little bit. Let's see if there's something going on there with TDOC. Nope, still nothing with TDOC either. Tune into, oh, there it goes. TDOC just continues to be junk. It's down another 8.5%. So there is something out on Teledoc. Good God Almighty. All right, let's see what we got. Come on, throw me some numbers. Getting wrecked. Palo Alto also getting wrecked here. Palo Alto's down 13%. My goodness. So let's talk about this for a second. What if I pull this out the 4 hour? Here we go. Here's your 4 hour. And we talked about this happening, right? And, that 280 mark potentially being a correction spot. I didn't think it was going to happen today, but it looks like it could be on the table. Palo Alto is down 11%. It's down at 324. 280 is where the top of this zone here, down the bottom, right here, and it's continuing to get wrecked. And after hours trading, this isn't surprising to see Palo Alto selling off like this, but let's try and figure out why. So if you guys didn't get this at the beginning didn't catch this at the beginning of the show, I talked about Palo Alto's expected earnings per share at $1.30. $1.97 billion was the estimated revenue, 6 upward revisions to 3 down. They came in at $1.46, so beating expectations of that $1.30 mark. Revenue of $2 billion also beat the $1.97 billion revenue number. But could it be guidance that's crushing this stock? Don't have the guidance numbers just yet, but they beat earnings on the quarter that they were reporting on. They see adjusted earnings per share of $1.24 to $1.26 for Q3. That's fiscal year. So we're currently in the third quarter for Palo Alto. They see Q3 revenue 1.95 to 1.98. The estimate there was 2.04. So the current quarter that we're in, expectations were at 2.04. So Palo Alto is coming below that. Always the biggest influencer on stocks during earnings, unless it's some outlying catalyst, is going to be guidance. So that's why, some of you might be tuning in being like, well, what the hell? They actually beat earnings and they're selling off. Well, it's because of that guidance. The stock market always trades on whatever the future holds, and the future holds for Palo Alto to be on the downside compared to what expectations were. They see fiscal year revenue. So for the entire year, 7.95 billion to 8 billion. The expectation was 8.15 to 8.2. So another miss on that for the actual entire year of 2024. So not great as far as guidance is concerned, which is a bit surprising, right? Because we've seen nothing but like just insane demand for cybersecurity. I'm going back to the 5-minute chart here on Palo Alto just to give you guys a little bit more of what's happening here. So it's down around 13%. Let's check in with Teledoc as more numbers come out for Palo Alto. I'll be happy to share those with you. But Teledoc also shit in the bed here. So let's see what they got. Can't imagine it's good. Let's see if I can come up with something here. What do we got? Nothing for them just yet. Kind of surprising that it's taken that long for them to come out. Let's see here on Palo Alto. Nothing additional to share with y'all. Abraham says, I just woke up and everything got clapped. Presto says exactly why I got puts on Teledoc. Making some money there. Nicely done. Tank 7 said this could be NVIDIA tomorrow. I think there's certainly a potential for that, Tank. It's a stock that's extremely hyped up. I guess we'll find out if it's overhyped or not tomorrow, but I wouldn't be surprised if we saw some sort of sell-off on NVIDIA, just given as much as it's gone crazy, right? But, one thing that Don from the Don Front Show has also told us is that they're struggling to keep up with demand on the AI side of things. So it wouldn't surprise me if we saw a move up on NVIDIA. It's one of those stocks where I don't know if I would buy it all the way up where it's at right now, but I certainly wouldn't short it either. It's really kind of how I felt about Tesla for the longest time before it, got to $1 trillion stock. Back in 2017, 2018, it was I would say that for probably all the way up until COVID. I was just like, this is a stock that I wouldn't just you just don't short Tesla. That's like the number one rule. Just don't short it. Um, so Teldoc's down around 8%. Let's see if there's anything updated on those earnings numbers. Yeah, so they came in a loss of 17. They actually beat that expectation. They were supposed to come in at a loss of 24. Revenue came in and missed $660.53 million. They missed that expectation by around 10.5 million. So miss on earnings, revenue missed, but beat on earnings. They see Q1 adjusted EBITDA 52 to 62. The estimate was 66.5. So again, missed on expectations for guidance. Not good. Not good for Teladoc again. Surprise, surprise. Let's check in on Caesars. By the way, guys, if you're just tuning in, Palo Alto is on your left-hand side. We just got done covering Palo Alto. I'll return back to that to give you guys a recap on what's going on there and why the stock's selling off and why it's important for you, especially if you're looking for opportunities on Palo Alto. Some opportunities there that I'm seeing on Palo Alto. Sean and Jay says NVIDIA's a different story. They'll have the muscle and further upside. Listen, that's what I'm saying. I don't disagree with you. I mean, that's what I've said in the past and even just today. So I don't disagree. I just would be cautiously optimistic if I was an NVIDIA holder. At least in the short term. NVIDIA's not going anywhere. It's going to probably be arguably the biggest stock in the world by the time it's all said and done. Could very well be that. This particular quarter, maybe not. Caesars Entertainment Q4 earnings revenue holds at 2.83 billion, narrowing net loss to 72 million. Digital growth shines with a robust full year comeback. Revenue remains steady as it's at 2.83 million. 2.83 billion. Sorry, 2.83 billion. Expectation on Caesars earnings. What was that? 2.86. So they missed on expectations on revenue. Let's see what else we got on this. Let you guys continue to watch the action there. So they came in loss of 34 cents. They missed earnings by 23 cents. They were expected to come in at 5 cents per share. They came in at a loss of 34. Revenue came in at 2.83, as I mentioned, missed by 30 million. Same store adjusted EBITDA of 930 versus the 949 million for the comparable prior year period. That's disappointing. I thought Caesars actually was going to do well this time around. They are seeing a little bit of a bump up. They were red, now in the green here. Not a ton of movement from Caesars, but they've recovered for sure. Palo Alto still sitting down here, down at 13.5%. And let's go ahead. So we covered Caesars, we covered Teladoc, blah, blah, blah. Let's take a look and full screen this out on Palo Alto. So this is your 5-minute chart on this. If you guys didn't catch the news on Palo Alto, let me share with you what happened. So they came in and beat on the quarter that they were reporting on. And but the guidance is really what killed them. They came in at $1.46, beating expectations by 16 cents. Revenue came in at 1.98 billion. They beat that expectation by 10 million. So let's just call that in line. Remaining performance obligation grew 22% year over year to 10.8 billion. That's an incredible number. Non-GAAP operating margin grew 580 basis points year over year to 29%, which is also great. But here's what killed the stock today. Q3 outlook. Total billings in the range of 2.3 to 2.35, representing year-over-year growth between 2 and 4%. Revenue in the range of 1.95 to 1.98 billion, representing year-over-year growth between 13 and 15%. We were expecting over 2 billion for this current quarter, and so that's why the stock is selling off. Diluted non-GAAP net income per share in the range of 1.24 to 1.26, using 3.34. Sorry, using 347 million to 351 million shares outstanding. The entire 2024 outlook. Remember, we're halfway through the year for Paolo Alto, so we're currently in Q3 for them. Total billings in the range of 10.1 billion to 10.2 billion, also coming in below expectations for the year, representing year-over-year growth between 10 and 11%. Total revenue in a range of 7.95 to 8 billion, and that'll be growth of 15 and 16%. Non-GAAP income per share in the range of 545 to 555, using 3.45 to 345 to 347 million shares outstanding. Adjusted free cash flow in the range of 38 to 39%. But the real big key is current quarter not looking great for them, and they lowered their guidance for the full year. So what does that mean for you as a trader? What does that mean for you as an investor on Palo Alto? Well, as a trader, if you're looking to take a short-term trade on this, I would see how it reacts tomorrow and keep an eye on this spot here. See this white line? This is the top of this zone here around 280. I think there's reason to believe that it can come down and at least settle out around 280. It's trading at 319 right now, which means it's got a ways to go. Could it come down to these levels? I think it's certainly possible. What's the more likely scenario? I think the more likely scenario is that it actually does. We do see some sort of dead cat bounce to 337 tomorrow. So if you want to catch that falling knife, by all means, it's of course risky, but if you want to catch that falling knife, especially if it starts to slow up here on the selling, then could ride all the way up to that resistance at 337. I'd be surprised at this point in the short term that it moves above that. I've been surprised by so many things though, so you never know. But what I will say is that that's going to be the first stop. You want to grab a falling knife here. Like I said, by all means, set your stop losses, manage that risk. But if it's going to ride back up, it's going to come back up to this resistance at 337, and that's going to be the real test for it. So that being said, if you're a longer term investor, you want to see where this goes. I still think that 279, 280 mark is going to be an area to watch, which is right here. So this is your daily chart. This is your longer term outlook. Obviously, you can see Palo Alto has been on an absolute tear. It's up 25% before today. It was up 25% since the beginning of the year. It's been up 120% over the last 52 weeks. So is this really all that bad if you're an investor in Palo Alto to see a little bit of a move down? Probably not. I think this is more or less an opportunity to grab this thing. After all, they are still growing. Just because they missed guidance numbers doesn't mean that they aren't growing at 14, 15%. I just got done telling you that. So I think that, capitalizing on the overreaction, if you're looking at this from a longer term perspective, let's just say 6 months to a year out, I think that you're going to be just fine, especially if it does come back down and retest that 280 mark, as it's now trading at. So here's where if we're looking at the daily chart, this blue cursor right here, this blue line that I'm looking at, that's where it's trading at right now. It is possible to kind of see it sitting here at 318. Could be a very weak support, but I think that if it breaks below that 318, again, 280 is going to be on the docket here. That's this white line here, this white support or this zone that Don has laid out for us. So keep an eye on those areas if you're a longer term trader. This 318 kind of looks like it could be a spot, but keep an eye on that. It's already down to 317. So like I said, weak support, I think, for that one, but keep an eye on that zone all the way down to 280. SEDG, is it Dick? What is that? Dick Avima and Melanie asking about SEDG. Sure, we can take a look at that. Solar Edge Technologies. Let's see. They're down 17%. I had no idea that anybody had interest in this today. And then I had two people asking about it. So I appreciate you. Yeah, so getting crushed here after hours. Let's take a look, see what's going on with them. They came in. Solar Edge Technologies came in. Loss of 92 cents. They did beat by 42 cents. Revenue came in at 316 million. They missed that by about 9 million. Not great there. They came in and the growth here is slowing significantly by 65% year over year. That includes that miss in revenue. Not good. 901 megawatts of inverters shipped, 133 megawatts of batteries shipped. As of December 31st, 2023, cash equivalents, blah, 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 blah. Total 634.7 million, and net debt of compared to 831.4 million. Also not great numbers. Q1 outlook revenues came within the range of 175 to 215 million. That looks like another miss on guidance. So kind of a double whammy here on SEDG. Yeah, SEDG, Solar Edge Technologies, down 17% here after hours. Melody, Melody just likes to call trash, likes to call it what it is. Can I cover realty income as well? Yeah, which one's realty? Is that O? O is realty income. Yeah, realty income. That's up 0.5%. Did they have earnings today? I must have missed that. They did have earnings today. They missed first in, first out of $1. They missed by 4 cents. Revenue of 1.8 billion. They beat that by 96 million. So that was a good number. Let's see if I can't find what else we got here on O. Guidance net income per share 122 to 134. Normalized first in, first out per share 417 to 429 versus 425. So that was kind of like in line. Kind of on the low side of that guidance though, too. 413 to 421. AFFO, same store rent growth, approximately 1%, occupancy over 98%. So kind of a mixed bag for O. You want to take a look at, I mean, if you own O, it's probably for the dividend, right? So I don't know if you necessarily care too much about what the day to day is doing. As long as you get that dividend, you're good. Um, it's a monthly dividend, so I don't know if there's really much to say, but those are your numbers on realty. Is there a lot to like here? I think so. I mean, we're seeing housing come down, demand still staying strong. Housing prices come down a little bit. Let's not get carried away. But we saw what Zillow did, and we saw what oh shoot, what was the other one? We saw what some of the home builders did. They're all doing pretty decent. It was Zillow. I'm drawing a blank with the other one that already reported this quarter. But either way, the real estate we're starting to see actually have a little bit of a bounce back, and so I think that this is actually a good one to hang on to. Will we see this 58, 60 area again? I don't know if it happens anytime soon, but nevertheless, like I said, you're owning O because of the dividend, not really much else. Ryan Hooper, we covered Caesars. Is Enphase going to have bad earnings next quarter? We already covered Enphase, I believe. So I guess we'll just have to wait and see. Karam, can't they make up guidance number higher than Wall Street expectations so the stock doesn't go down? Well, Karam, they could, but that would also be illegal. That would also be illegal. All right, let's take a look at now. Can you sandbag it a little bit? Sure, but not by that much. Your sandbagging is usually going to come with a conference call to, or you're going to polish the turd, or you're going to temper expectations so the stock doesn't get ahead of you. That's what good CEOs do anyway. I wanted to check in on some of the other cybersecurity stocks. CrowdStrike has yet to report earnings. They're not going to be reporting earnings until March. And so I just wanted to see how this was looking. Let's go back to the 5-minute chart. And it is reacting to, oops. It is reacting to, I think I just screwed up. Don's chart here on CrowdStrike. He's going to kill me. Um, but it is reacting to Palo Alto here, down 4.5%. Could be another opportunity. So I think CrowdStrike, like Palo Alto, we talked about Palo Alto coming to 280, 291.5 could be that spot. I would imagine if that CrowdStrike isn't going to have the exact same reaction as Palo Alto, obviously nothing's a guarantee, but this looks like it could potentially be an opportunity for CrowdStrike. Snook says Palo Alto shorts are coming. The shorts are coming. Yeah. Thoughts on Etsy tomorrow? Yeah. So we do have a huge docket tomorrow of earnings. Obviously, Nvidia is going to be the big dog on campus as far as earnings reports are concerned. But then there's Etsy, Rivian, Lucid, Dutch Bros. And so make sure that you're hitting that subscribe button, hit that notification bell if you haven't done so already, because we're going to be reacting to those tomorrow as well as we do every day. So Etsy is going to be an interesting one because one of those crazy flying stocks throughout COVID for obvious reasons. Everybody was buying stuff. E-commerce was ridiculous. But when we look at the growth side of Etsy, it hasn't been as good as it used to be. 9.5% when you're essentially a competitor to like an Amazon or what have you isn't all that great. Earnings is kind of the other side of this coin. Lots of mixed. It's a mixed bag here from the street. Looking at the valuation here too. It's not. It's trading. It's at 16 times next year's earnings. The S&P 500 is around 16 or 17. So I wouldn't say that it's too expensive, but I also wouldn't say that it's cheap. And so I would just say it's right where it needs to be. I don't think that there's going to be some crazy move to the upside off of this unless something wild happens. I'll say this: they are profitable, and the profitability here is damn good. 70.5% gross profit margins, and the money that they're making off that is also good. Net income margin is 12.5%. EBITDA margins at 16%. So just all really good things from a profitability perspective, but it's trading exactly where it should because of that. So I wouldn't say that Etsy is going to be one of these stocks that goes bananas tomorrow, but I would say that it's just right where it needs to be, right where it should be, in my opinion. Luca, yeah, extensively went into Palo Alto. So just go back during the stream and check that out. Newton Jane having a good day. Got puts on Palo Alto and Teledoc. So that was a good outcome after hours for me. Well done. And guys, that's going to do it for today's show. It was only 3 major stocks. We obviously covered Solar's Edge too, but tomorrow, listen, I'm welcoming the light day today because tomorrow is going to be crazy. Tomorrow, if you're not, like I said, if you're not subscribed, hit that subscribe button, hit that notification bell. I'll be back tomorrow at 3:45 p.m. Eastern time. I'm going to be covering Nvidia. I'm going to be covering Rivian, Etsy, Lucid, Dutch Bros. Wingstop's actually tomorrow morning, and that should actually do well too. I just looked at that. So, going to be a big day tomorrow. Thursday is another big day. We got Block, Carvana, Mercado Libre, Booking, Intuit, Live Nation, also all reporting Thursday after hours. And even in the morning, Thursday, it's Moderna. Nikola, I don't know. How's Nikola still even a company? Is beyond me. But they have earnings on Thursday morning too. Fiverr, Wayfair. So just another huge week for earnings, guys. And that's what I'm here for. So make sure you're hitting that subscribe button, hit that notification bell. Thanks so much for tuning in. Have yourselves a great night, and I'll see you tomorrow. Maybe. Hey, thanks, Nukaru. Appreciate you.